Hey guys, I just want to go over my strategy with you, make a video so I can explain everything, and then if you have questions, you can message me, you can hit me up, you can wait for the Zoom call to come out, and you have your questions ready then. Um, so I'm gonna start from top to bottom. What I'm thinking about, how I approach the market, uh, how I make my trades. I'm gonna try to put all that into this video if I could. I may leave something out, but if you have any questions, any concerns, anything you want me to dive deeper into, anything you want me to explain, let me know. All right, so let's get right into it. So the first thing I do when I approach the market, I want to know what type of market I'm in, right? I want to know if it's going up, if it's going down, if it's in consolidation, all of that. Those are the phases of the market, right? So I want to show you this. So this is your consolidation phase where price moves sideways. It's not really moving up, not really moving down. It's staying in a range, right? It's bouncing in between the range, a set price, right? So that's your consolidation. This is called your accumulation phase. I just call it consolidation. Then you have your markup, what they call markup. I call the uptrend. So where price is trending upward, right? Making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. That's the definition of a uptrend, making higher highs and higher lows. Then you have your distribution phase, where again price moves sideways, staying within a range, and then your decline. So lower lows and lower highs, lower lows, lower highs, right? And it's continuing down. That's a downtrend. That's the phases of the market. Now, once I've established what kind of market I'm in, let's take this for instance. So I'm on the S&P 500, right? And there you can clearly see that you're in the uptrend, right? Because you're making higher highs, higher lows, and it's continuing on up, right? So the opportunities in the market um, are usually on the pullbacks, right, of the market, pullbacks of the market. Now, what I try to do, if I'm, hopefully I can catch it at the beginning of a trend, right? Instead of just jumping in the middle and have to wait for a pullback, you know, to get in on the entry. And, these are pullbacks right here to the moving average, the 50-day moving average, right? That's usually an entry point for traders if you want to get in on the 50 or close to the 50. As you can see, it respects it going all the way up. Now, it may dip down and get close to the 100, but most of the time it respects it. But if I can catch it at the beginning of a trend, then I would love to do that, right? And what I use to determine, let me use this one. This is TD Ameritrade. The other one was TradingView. TradingView is free. You don't have to pay for it. You can sign up. It's what I use for charting. This right here is TD Ameritrade. This is their Thinkorswim platform, which you can, once you sign up for TD Ameritrade account, if you choose to go with their broker to do your trading, you can download this platform from their website, and it's free, right? So if I can catch the beginning of a trend, let's just take this for example. So the beginning of this year was the beginning of a downtrend, right? This is the highest point. It even tells you this is the high. And since this is January the 4th, So since January the 4th, we've been going down. Now, what are some things in the market that would have told me that this was about to happen or it was happening at that point? And what I use is I use RSI, I use CCI, this is RSI, this is CCI, and MACD. As you can see here on the MACD, once you have this blue cross over the white, which is your 12 versus your 26, right? These are moving averages within the MACD. MACD stands for moving average, convergence, divergence, right? So once that 12 goes over the 26, I think that's right, 12 over the 26, that's when it's giving you a indication that price is about to go down, right? And then as you can see, it goes down until it turns back up. Now, it doesn't always, like, if you're waiting for, I wouldn't take this as an entry. I would just take this as a visual to show you that, you know, where the market is, right? If we're currently going down or if we're currently going up. Because this is what I call a lagging indicator, right? Price has to move in order for this to plot its you know, its moving averages and histogram. All right, so it's a little slow. So if you use it to get in, you'll be getting in at the, you know, you'll be getting in late, right? So you see a cross here going back above, but it's already bounced here and made its move on up. Now you can see price. This is where the top is of this move up, right? So if you waited to get in, you know, the MACD telling you to get in, then you're gonna be way too late. Now you can go to the lower time frames because this is the daily chart. There's every candle that you see is a day. Now you can go down to the 4 hour, the 1 hour, the 15-minute, and the MACD will probably give you a better entry if you wanted to use this. Now, but what's telling me, what's telling me that this is about to fall or this is about to go down? One thing, the RSI. When this started to trickle down and, you know, price was going up and you started to see divergence. Divergence is when price is staying in the same range or it's moving up, but RSI is moving down, right? That's showing you that RSI is telling you that there's weakness in the market and you need to be careful. So even though price could still move up or stay in the same range, which it does, it's moving down, right? RSI is moving down, which is an early indication of this move down, right? So it's telling you the whole time, you know, it's getting weak. The same thing with CCI, right? It was moving down. So you want to be careful of that. Careful of, you know, when RSI and CCI is moving down and you're in the buy, you want to be careful. You probably want to get out and look for a sell. But this was in a uptrend. This is in an uptrending market. Now, when structure is broken, now we talked about market structure, right? Uptrend, downtrend. Now, when the structure is broken, and I'll show you what I mean. Let me pull this back up here. So the structure of an uptrend is right, higher highs, higher lows, higher highs, higher lows, right? And you can, you can draw a trend line to it, and it should, it should respect it, right? Like, look at this. How it respects that trend line going all the way up, just like the 50 moving average. Now, when it's broken, meaning price falls below a low, right? Making higher highs, higher lows, higher highs, and then it makes a lower low, and then a lower high as it goes back up, right? This high here is lower than this high, so I call it a lower high. Now, this could be a beginning of a downtrend, or it can be a signal that, is starting to get weak up here. Once it breaks that uptrend structure of higher highs and higher lows, and it prints a lower low, which is lower than this low, and a lower high, and it continues to do that, then it's showing you that there's weakness in the market. Now, even though it moved up, the RSI is telling you that it's still weakness in the market. Then volume is getting low. That's another thing that I look at, right? Now, as you can see, volume is steady, and it's even increasing here. You got a lot of sellers coming in, buyers pushing back up. It's just a battle going on. But as price moves up here, you get lower volume. That means less buyers are pushing it up, right? And that's something you want to take a look at too. So all this would have been indicators to me, giving me the information that, okay, there's not a lot of buyers in this market pushing up. Okay, RSI is creating divergence, right? As price is moving up, right? The CCI is creating divergence. I'm gonna be weary of any calls or any buys that I'm gonna be contemplating in this uptrend, because it's starting to get weak, right? And another indicator that I look at, which is my main indicator, is the McClellan oscillator, right? So when the oscillator is above zero, that means it's bullish, right? When it's below, it means it's bearish, right? That means it's weak. Above the zero, it means it's strong. So when I have price falling below, well, not price, the McClellan oscillator falls below zero, right? And price is at its highest. Like in this uptrend right here, price was at its highest on this day. But look at the McClellan oscillator. It's at negative 53, right? This is telling me something. That means that we're pretty weak. This S&P 500 index is pretty weak. You want to start looking for sales, or you want to start looking for an opportunity to get in for a sale, or wait for the structure to change from um, an uptrend, then it starts to consolidate right up here, and then it starts to, this is your consolidation period. This is the distribution, right? Distribution, as price moves up, it has a consolidation period before it starts to move down, right? So this is what happens up here. It's not much structure to it. It's not making higher highs and higher lows anymore. It's just bouncing in between a box, right? Right. So as it's bouncing in between here, this is your distribution phase, your consolidations phase. It's moving sideways. Now, once you have a breakdown out of this box, right? So when price here moves below this box, boom, and it continues down, makes a lower low, comes back, makes a lower high. This is the beginning of your downtrend, right? right? This is the beginning of your downtrend. Now it does come back up, makes this high, and then it continues on down. But this was telling us here that it's a change in structure, right? You went from an uptrend to consolidation, this uptrend into consolidation, and then now we're falling down into a downtrend, right? So that's how that transition works. And this is how I gauge it. This is how I gauge on, okay, what's about to happen so I can prepare and get ready, right? I'm looking for a break of the lows, right? So this is a trend line here that could have told me that price is about to fall right here, this trend line. So as price falls below, it continues down the rest of the day, right? And that's how I gauge it. Now, what do I do to enter the market, right? I enter the market off of trend lines, off of support and resistance lines. Those are usually my indicators on where I get in, right? So these could be entries. Once I know that I'm in a downtrend, right? I'm looking for bounces off of 100 EMAs, the 50 EMA, and the 200 EMA. Now, once I'm below that, I'm looking for bounces off of the trend lines, right? So I draw a trend line based on 2 points, this highest point and the next highest point. I draw that line out to see if price would respect it on the way down, right? So at this point here, so this point and this point made this trend line, I just extended it on out. So as price approaches here again, this trend line, this is a selling opportunity, right? Now this is support, right? As you can see, this particular area was respected by this candle, this candle, this candle. So I'm gonna draw a trend line. So when price approaches it again, that's a buying opportunity. Now it may not be for much, right? But I want to be aware of this area. So when price approaches it again, it's usually a bounce that happens, right? So think of this as a floor. And you bounce a ball, the floor is gonna have a little bounce, right? Until you go through it. And then it becomes resistance. It becomes your ceiling, right? And as you can see, price respected it, up in here, right? So these are buying opportunities off of support, and these are selling opportunities off of resistance, right? And this trend line. So you could have been selling off the bounce of the trend line or off of resistance. You could have been waiting, right? So those are the opportunities in the market that I look for, right? And just like taking a look at these indicators for a transition from uptrend to downtrend, I'm also looking at that, from downtrend to uptrend. So this uptrend here, well, I wouldn't call it an uptrend, more so a pullback or a correction or a retracement, right? Because you're in the overall downtrend, but you're gonna have pushes going back up, right? So these pushes going back up, or just pullbacks or retracements or corrections, as they call it, right? And so how I gauge those pullbacks is simply either trend lines As you can see here, the breaks of these trend lines is bullish, right? So if it breaks that trend line going back up, that's bullish. Also, I'll take a look at the RSI and the CCI. If the CCI goes above 0, you can see that middle dotted line there is 0. This is the 50 on the RSI. You can see the number over here. This is the 50. And when the MACD turns the blue over the yellow, right? Blue over the yellow means it's going up, right? When those happen together, that's an indication that, price is about to go up, and happen on this candle here. So that could be a good entry for push up, right? And also you can see the McClellan oscillator came above the 0, and it stayed above it, right? So once it stays above the 0 and it makes this structure, these complex structures, right? That means that it's going to be up there for a while until it goes back below 0, right? So that could have been a good push, right? That could have been an entry off of the support, because you have 1 test, 2 tests, then the 3rd test, right? Which is a push on up, using these indicators as a confidence booster, right? To get in on that push up, right? So, but knowing it's not going to stay long, because look at volume. Volume decreases as price goes up, right? So it's going to be weak. It's going to be a weak push up. It's not going to change direction and go into an uptrend from a downtrend. This is what I'm looking at. So, yeah, I mean, that's basically how I do it. I look for weakness, and I look for strength in the market, and I base my trades off of the indicators, using volume, the McClellan oscillator, RSI, CCI, and MACD. Now, one thing I do too is I draw trend lines here, which could be a little complicated, but I draw trend lines on the McClellan oscillator to, kind of show me where price can potentially turn around. And I'll show you what I mean here in a second. So let's look at this as an example, right? Let's draw a trend line here. And this just helps me. So I'm going from this peak here to, well, let's do, but not that's fine. This peak to this peak, and I'm extending it on out, right? Because price moved up, I'm going below these peaks. So when it falls below my trend line, that's an indication that weakness is, creeping in, right? This could also be a signal for a sell, right? In conjunction with what I'm seeing on the charts, right? Now, I drew this trend line earlier, right? Now, as price broke that trend line, moves back up to it, right? And you see consolidation happening. I have a trend line right there, right? So these are multiple confirmations in the market where, what is most likely to happen. That is that price is going to go down, bouncing off that trend line, bouncing off resistance here, but also the break of my trend line on the McClellan oscillator. So that would give me the confidence to get in there and, put in a put for option for this push down, right? And I'll do the opposite down here. I'll make a trend line going down over the top of these peaks. And when price breaks, that is an indication to get out. That's telling me that strength is coming in and I need to get out. Now imagine if I would have got in here on this break this day and then rode it all the way down until the next break. That's some pretty good change we got there. So short position. Let's say we go from here to here. Right here. So let's just say we got out right here on this candle. So on that candle, that is 463 points. Is that right? 463. That is 463 points coming down. And as you can see, volume increasing, going down, which gives me the confidence to stay in that trade if I'm in it, right? And not getting out until that trend or if volume falls off, where you have this big gap down in volume, right? So either or, either or. You made a lot of money up until that point. You could have got out early, or you can wait until the break of that trend line. And that's what helps me. This is what helps me get into my entries, a combination of all these things, right? The trend lines, the moving averages, the support and resistance, volume, McClellan oscillator, RSI, CCI, and MACD, right? All plays a part in, what I'm doing. But not only that, I'm looking at fundamental too. I'm looking at companies. Are they laying off? Are they doing massive hirings? Um, I'm looking at the housing market. Um, I'm looking at interest rates. I'm looking at reports that are coming out. Let me show you the reports. I go to forexfactory.com. It shows you reports on the day. Right now, this happened this morning. PPI. Now it's colored red here, because it's a very important report. Now, reports on inflation. It's a leading indicator of consumer inflation. Now, as you know, we've been battling inflation. So if I go, let's see what time that was. The report came out at 8:30, right? Now that's Eastern time, 8:30 Eastern, which would be 5:30, I believe, my time. This chart is on Eastern too. This is how important reports are. You don't want to be in a trade and you're not aware of what reports are coming out for that day. Because if you're say you're in a buy, right? So you're in a buy and this comes out and you get a massive drop right on 8:30 when that report the report came out. And you're not aware of the report coming out. Now, this moved from 3 36.16 to 36.01. So 16 points in a minute. 16 points in a minute. That's a lot of money being lost, right? Within that 1 minute. So we always want to be aware of reports coming out. We want to be aware of when the Fed is meeting, the FMOC, they're meeting. They're going to be talking about some things that could potentially move the market. That's why you see that red there. Then tomorrow you have CPI, which is also talking about consumer consumer inflation or overall inflation. But you want to be aware of these things. So what I went over here with drawing the trend lines and support and resistance and using indicators are called technical analysis, right? These are all technical analysis and technical indicators. Now, reading reports and how they affect the market, how they affect the Fed and what type of monetary policy they're going to put in place to combat inflation, which what they've been doing is increasing interest rates to combat the inflation, right? So it went from like 2% a year ago to like 5%, 5.5% today. That affects the market. You want to be aware of those things. So that's pretty much it. That's the gist of it. That's what I use. Now, if you have any questions, any concerns, anything that you want me to explain in more detail, let me know. And if you like this video, hit the like button. Yeah, I'll see you guys next time.